Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Thursday, May 8, 2014. Markets though have been hit by a cold shower though. If we take a look at the situation here, at opening they were rising on Mario Draghi's comment saying that the ECB might adopt a quantitative easing program during the month of June. But finally, we had this cold shower and markets lost all those points. It's the situation on the Nasdaq, on the Dow Jones, and also the same situation on the TSX and the venture index. But where are we right now? What's the technical situation of the markets? Markets, you see, are still stuck within the sideways formation if we take a look at the S&P 500. So this situation is not a moment to be in a shorting spree. It's just a moment to reduce your long exposure and take some profits when you can on some positions. Same thing too on the Nasdaq. Actually, the Nasdaq is retesting again its support. Actually, those of you who are feeling less comfortable with shorting the markets though, then if ever we actually have a confirmation of today's decline that pursues itself tomorrow and for the weeks to come, I think some bearish ETF on the Nasdaq could be a good strategy. And as a target, we could have the Nasdaq hitting 3,978. On the TSX is the same situation as well, but on the TSX though, we're testing that top at 14,500 points. That former top, that is now this new support, might actually be broken down if ever we have a decrease on the energy sector, which is being the weakest sector. So today in this chronicle, what I'm going to talk about, I'm going to make first of all a follow-up on the last market chronicle on April 30th when we talk about a movement in the REITs sector. And I'm also going to talk about the energy sector, which is the weakest in the TSX, and the sector that is to be watched on the TSX, especially the gold sector, where you'll have to reduce your positions, your long positions, if ever the sector starts a bearish cycle. So let's start. First of all, if we take a look at the last market report I made on April 30th, when we had a solid upward sector movement in the lodging REIT, so far most of those stocks are actually able to resist and to actually maintain the upward trend. But there are some stocks where if ever they have reversed the upward trend, you should have reduced. I give you an example. Sunstone Hotel, actually that was a stock that was recommended among our analyst choice and market gurus.tv, but we had a strategy on that stock, an exit point. If ever the stock went lower than that, all that former resistance, we would get out. It did so on May 7, so that's why we got rid of it. Now we're seeing a rebound on that stock, but so far it's still okay for those of you who still got it. If you have reduced your exposure, it's still good. Elsewhere, most of the other stocks that we talked about, Hyatt Hotel, it's still a hold. Host Hotel Resorts, it's still a hold. Strategic Hotel and Resorts, it's still a hold. Marriott International, it's still a hold as well. Same thing for Brook Hotel, which is still staying within its sideways formation. And in the mortgage REIT sector, we also had a sector movement, but there are some stocks where you should actually reduce your exposure. I give you an example, PennyMac Mortgage Investment Trust. Clearly broke down that support, so goodbye PennyMac. Another stock like Healthcare Trust of America, since April 30th, the stock was able to maintain its upward trend, so you're able to still hold on to it. Same thing too for Washington REIT. Your exit point is at $24. As long as it stays above $24, it's still a hold in Washington REIT. And Alexandria Real Estate also as well, it's still a hold. Same thing for Medical Property Trust, but look, 1315, this is where you should put your stop loss on that stock. So among those stocks though, and the Hotel and Lodging REIT, we only got rid of Sunstone Hotel and our analyst choice on marketgurus.tv, and PennyMac Mortgage Investment Trust on the mortgage REIT sector. This is the stock that you should actually get rid of. Now, what about the energy sector? On the Canadian side, the energy sector is clearly starting a bearish cycle. Now, I'm just going to put a Fibonacci retracement here from that low to that top. So you see that the energy sector correction could continue until the 23.6% Fibonacci retracement, which is around 306.29, right? So at this point, that's where we might actually have a rebound. So what I mean by reducing your long exposure is just to avoid having to tolerate a loss until that on the energy sector. I give you an example. Black Pearl Resources was a stock that we recommended on marketgurus.tv on April 9th. Actually, you can have access to marketgurus.tv just by clicking at the link below. And Black Pearl Resources, since we recommended it as a buy on April 9th, we're able to actually recommend to take some profit around this area. Now today, with this correction on the energy sector, the stock got lower than the price that we paid for it on April 9th. So goodbye Black Pearl Resources. We got rid of our exposure there. Another stock, Western Energy Services. We recommended that stock on marketgurus.tv on April 9. Since then, it progressed well. We took some profit on Western Energy Services, I think, around this area. Now, with this correction that we have in the energy sector, instead of waiting for the stock to again go lower than 1079, we actually took a second round of profit on a stock like that. So this is what you should do on the energy sector, just to avoid actually having your portfolio witnessing a further correction. So Western Energy Services is an example where you can take another round of profit. Another stock, actually, I think that you have to reduce your exposure. It's a stock like Enerplus. When it broke out on April 30th here, it was great, but right now you see Enerplus is actually going lower. It's breaking that support, going back within that former upward corridor. So why risk continuing to hold on to Enerplus when the stock could even reach 22.29? I think it's better to actually reduce your exposure on Enerplus and get out of that positions. On the gold sector, this is the sector that we're watching, monitoring intensively to potentially reduce our exposure. We have a long exposure on a stock like Gold Corp that we recommended on marketgurus.tv. And on Gold Corp, if ever the stock goes below 26.50, that's a point where we're going to have to reduce our long exposure on Gold Corp. Other stocks that you could watch, let's say that you bought a stock like Torex Gold on April 17 on the breakout. Well, if Torex Gold, folks, go below 118, you're going to have to reduce your exposure because it will break that support. So this is actually the situation where we have. Markets are still neutral, yes, but they're testing their support. The energy sector is a sector that is more at risk. So the strategy is to get rid of some positions that are getting back to the price that you paid. Black Pearl Resources is an example of that. If you got it on April 9, take some profits in some positions that have progressed enough, like Western Energy Services. If you got it on the breakout on marketgurus.tv, you're able to do so and get rid of your positions that are either breaking their support or reversing their upward trend. And Enerplus is a perfect example of that. On the gold sector, watch your gold positions that are breaking their support. Gold Corp is an example, or Torex Gold Resources is an example. And in the REIT sector, most of those stocks are resisting, but if ever we have a further correction on the market, if ever they go further down though, you're going to have to actually reduce your long exposure on those sectors. And if you're less comfortable in shorting the markets, well then, if ever we have a confirmation of a bearish cycle on the S&P 500 or on the Dow Jones or in the NASDAQ, then we can go in with some bearish ETF. So that's it, folks. See you next week for your market reports. You can have access to all those technical analysis and advice on marketgurus.tv for free for 10 days. Me, I wish you good trading and see you next week.